The last case study and the last thing I'd like to talk about this evening before I turn it over to David for some question and answers is what we have internally been referring to for the last number of years is Spire 3. We've got Spire Canada, we've got Spire US, but as Mark and I are continually talking to our network of potential contacts to help us identify deals, and also talking to people who are great potential strategic partners, we've come to recognize that there's some assets that really represent good opportunities, but they don't fit within Spire or Spire US. So to describe this new fund, which we're calling Spire ValueAdd, that's what it is. It's a value add fund. So what's the difference going to be between Spire LP and Spire ValueAdd LP? Well, we've talked about stable in-place cash flow, which is really important for Spire and Spire US. When we look at Spire ValueAdd, that's not going to be the main driver of our investment choices. So there's going to be limited or no cash flow distributions. Value creation is through rental revenue growth and management. Aggressive asset management in our existing funds, but the in-place rents, we're just growing those rents incrementally over time. For Spire ValueAdd, it's redevelopment or active repositioning, and I'll describe that in one of the properties that's going to go into this fund here in a minute. Projected returns for Spire, 8 to 10%. We've managed to do that consistently since inception for Spire LP. For Spire ValueAdd LP, we're looking at something that's north of 15%, and I'll describe in a sec how we're going to get there for that. Long-term investment horizon for Spire LP, a shorter-term investment horizon. What we do is we identify the opportunity, we add the value, and then we sell. If we're able to execute in a short period of time, the IRR is going to go up. If it takes longer to execute, the IRR is going to come down. So, Vancouver. In Vancouver, we love our real estate. Both Mark and I are born and raised here. We know this backyard, but it's really hard to make opportunities fit with our investment criteria for Spire. So what would an opportunity look like in Vancouver that would get us excited? Well, we talked about San Francisco and that hotbed, the live, work, play location. Well, the area that's called Mount Pleasant in Vancouver, and you'll see here I've identified one of the opportunities I'm going to talk about here just in a sec. You've got the Canada line, you've got Hootsuite, which are some technology, and there's other technology companies that are actively moving into this area. We've talked about the village at False Creek. We've read about it in the papers for the last number of years, and the media has painted it as a disaster. But it's actually a vibrant community that's really coming into its own and is really going to drive this live, work, play that's going to happen throughout this whole Mount Pleasant area. Why do we like Mount Pleasant? It's close to downtown and rapid transit. There's an industrial zoning, so what we're looking for is where is there an opportunity that we can create value in a relatively short period of time. Well, this area of Mount Pleasant used to be an industrial area, but they've changed the zoning recently, which allows a wider range of office users. And tech companies like creative space. They like these old buildings where you open it all up. It's not in traditional offices. It's open space where they can be creative. So this is an area that I think is going to get a lot of attention, or is already getting a lot of attention. Property taxes are typically lower in this area than they are downtown in the peninsula. An important metric, gross rents are going to be considerably less in the Mount Pleasant area than they are in Gastown and Yaletown, which are already established areas. And there's strong demand from technology tenants and creative space. Hootsuite and Generate are examples. Let me talk just very briefly about strategic partnerships. When we went into the US, actually back in 2007, Spire US LP was a wholly owned sub of Spire LP when we first started, and in 2010 we opened it up to investors so that they could invest directly with US dollars into the US fund. But we started investing in small amounts with a strategic partner called Ventura Realty. And John talked about, in his presentation, the south and southeast of the US as being a really key area for rental apartment investment. We have developed since 2007, so now 7 will be going on 8 years, a strategic relationship with an incredible partner called Ventura. Our interests are aligned. They put money into the deals. They've got a level of expertise that we don't have because they focus strictly on the multifamily sector in the south and southeast of the US. We've built a model, and we've seen that model really perform well for us as we develop this relationship. Eric talked about the importance of relationships. We've got really good relationships with Ventura Realty, now have about $100 million of our capital in joint ownership investments with them in the multifamily sector. What have we learned about those strategic relationships? We've found that partners can open up opportunities for us and enable us to see and participate in deals that we might not be able to do on our own. So when we're looking at the Mount Pleasant area, one of the partners that we're looking at is a company called PC Urban, Pacific Urban. And Brent and Gary are here this evening, and you'd be welcome to meet them afterwards. PC Urban sources opportunities, does the initial feasibility, and ultimately acts as a development manager. I've shown here several of their properties and projects that they've been involved in recently. They've got an established in-house development team. That's something that we don't have in-house for Spire. We've got great asset managers. We've got great analysis and financial reporting, and we understand a lot about the right deals in the right locations. We also have a lot of experience through Mark in terms of leasing activity. So we've got potential to have a really good strategic relationship. They've also got a strong track record, and they put their own money into the deals, which is an important metric for us. And they've also partnered with other institutional type owners, which means that we're not training them on how to relate to people like us. They've already got that experience and that track record. So we think it's got potential for not just this one deal that I'm going to describe, but some other deals as well in the future. So let's look at an actual. This property is located on West 7th in Mount Pleasant, 33,000 square feet industrial office property, 6 tenants. So again, when we go back to the beginning of Spire LP, we started with smaller deals and then we grew it. Here again, we're starting with smaller deals and we'll grow it. The opportunity here is to create a fund with multiple investments so we get diversification. We're not putting all of our eggs in one basket, but we have to start with some deals. So this is on the risk spectrum, what we see as a lower risk deal, and I'll explain to you why here in a sec. So it's located between Columbia and Manitoba Streets. The existing rental rates are 40% below market. So here's the pregnant opportunity. If we can acquire this asset, or we are acquiring this asset, and raise the rents in the near term, we can increase the value. And because we're not long-term players on this, we buy the asset, upgrade it, increase the rents, and then sell it to another investor. All the leases expire within 2 years, so if we have a 3-year investment horizon, we should be able to execute this plan in that period of time. So opportunity to renovate and reposition the property. It's not being managed well, so there's lots of opportunity to improve the management, improve the looks, and address some of the issues that a good, prudent owner and developer would with this particular asset. So we'll renovate. We'll address the other deferred capital items. We'll renew the current tenants on the ground floor and the basement, or put in new tenants at higher rents. And we'll complete the releasing and repositioning within a 36-month period. And then we'll sell the asset once it's been stabilized. So what does it look like? These are all projections, but that's what we've been doing for a long time. We do our due diligence, we put budgets together for costs, we put a plan together, we execute the plan, and we get results. And some things are within our control, some things are outside of our control. So these are just estimates, but you'll see that there's a portion here, projected rental cash flow. So the rental cash flow is just a small portion of the projected profit. The other value is going to come from increasing the rents and selling into the market. So, why real estate? Circling all the way back to the beginning, I decided to, rather than recap, because you've been a good audience and you're not going to forget any of the things that I've said already. The billion-dollar question, we went to Bloomberg. We looked at the 20 wealthiest people in the world and asked them this question: how many of them invest in real estate? And the number was 17 of the top 20 invest in real estate, which supports what John was saying about Tiger 21 and other investors. It's what we do. This is where our money is invested, and we're aligned with our interests and our objectives the same as you. So thank you very much for investing with us, and we look forward to doing our best to continue to deliver income and capital returns for you in the future. Thank you very much.